When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
All right, everybody, Quasar Markets Live. I have a really good treat for you today. My friend Bart Naylor, my former boss for a while too, as well. Welcome to the show, Bart. How are you, man?
Good. Thanks for having me.
I think a lot of people get nervous when they hear public citizen or watchdog, and you've been at the forefront of all of that. You've been the stalwart to keeping track of Wall Street and the banks. Tell me a little bit about how you got started here, boy. You got started early, and how you got involved in all that.
Yeah, I think it's a fun story. So I'm from Idaho. I proudly went to Boise High School. Our rival was Bora High School. And to this day, I shudder when I hear the name Bora High School. I went to one of my Boise High School reunions and found out that one of my classmates had married somebody from Bora, and I just thought that was wrong. That was unnatural. That just doesn't work out. But I did learn a little bit about civics, about how government works, and I learned that laws are made by people of good faith that get into a room and the best ideas prevail. At least that's what I was taught in high school. But then I came to Washington and learned it was Boise versus Bora. It was a rivalry, and that it wasn't about the best ideas.
Feels so like University of Illinois versus Michigan in my world. I don't think I like Michigan too much. That's awesome. Yeah. You're also the former chief of investigation of the U.S. Senate Banking Committee too, man. You must have had some stories in that place.
Yes. It was a time of insider trading, of Michael Milken, of corporate takeovers, barbarians at the gate. It was also a time when savings and loan rogue named Charles Keating was buying off senators, infamously subsequently known as the Keating Five, and essentially they were my bosses. I wound up investigating my own bosses.
And that's an interesting point when you're in D.C. There is a fine line where a lot of times people don't realize that in D.C. we're all friends, so we're all trying to do the right thing, and sometimes that just gets a little bit wonky, right? I mean, you seem to be, you Harvard grad and all of that, and getting thrown into the mix of, especially with Charles Keating and Michael Milken. Have your thoughts progressed over the years now that you're a Washington quote insider?
I assume they have. I've become far more cynical. I kept a diary when I was the head of investigation for the Senate Banking Committee, I guess because I had been a journalist and I thought that there'd be a book in it. And I titled my diary, because I was hoping it'd become a book, Ruling Capital, because I conceitedly thought that there we were, the Senate Banking Committee, making laws for the banks, and that we ruled, we were ruling capital. But I came to realize that it was the other way around. The money in politics meant that capital was ruling the capital, money capital was ruling capital with an O, Capitol Hill. People go to become, senators join the Senate Banking Committee not because they wake up every day thinking about banking policy, about margin requirements on uncleared swaps or collars or anything about the market or capital standards for banks. What they think about are what the voters are thinking about, namely wars in the Middle East and Ukraine, or bombing Venezuelan drug boats. They're not thinking about banking issues. So why would you join the Banking Committee? Well, it's for fundraising so you can get reelected. And that too many senators think you get a free pass on how they vote. And since the Republicans have a fairly deep source of money from business, Democrats too often get money from Wall Street, again, because they think their constituents don't really care. And that's been a problem for me as an advocate, a public citizen advocate working on behalf of consumers, because too often even Democratic senators aren't as sympathetic to the consumer point of view, given that they're trying to raise money from Wall Street and most recently from crypto.
Yeah, let's talk about that. You've been the forefront of all of that side of it. And of course, I'm a crypto proponent, but I believe in guardrails too. Where are we now in the philosophy of Bitcoin and crypto in general? Where are we with not only the philosophy, but you've made a point that it hasn't, Bitcoin itself especially, hasn't really fulfilled any of the things that we talked about that's going to happen. And where do you see the future of crypto?
Well, again, we may have a difference of opinion, but so a couple of months ago, Warren Buffett retired as arguably the most successful, or one of the most successful investors in American history. And he put together a company that outright owns Geico, a major insurance company. Berkshire Hathaway is the largest shareholder in Wells Fargo, Goldman Sachs, Coca-Cola, I don't know how many other companies. And together the market capitalization after his long successful career is $1 trillion. And all of those companies make money. Bitcoin is twice that. And there's nothing behind Bitcoin other than the hope that other people will buy it for more than you bought it. So I think it's Wile E. Coyote that's been caught over a cliff, and there's nothing beneath him.
Yeah, and I kind of agree with you on that. That's the fool's theory, right? Hoping that the next person will come around and buy. All right, well, the guy behind a lot of that just got himself $1 trillion. Elon Musk. One of the things that you fight for is CEO fairness and CEO pay. I know you've done that for many, many decades now, Bart. So talk to us a little bit. Elon Musk got the vote, and he won the vote for that $1 trillion payout. So talk to us a little bit about CEO pay.
Well, a half a century ago, the average CEO is being paid 30, 40 times what the average person at his firm was being paid. And now it's 350 times what the average guy is paying. The average CEO pay for the Fortune 500 last year was $18.5 million. Why did that happen? And I think it happened because the machinery of corporate governance has too much sand in it. What's corporate governance? It's the board of directors, it's the auditors, it's the rules by which a corporation is governed. But too often, the board of directors are not truly independent. They are friends, they are themselves former CEOs, or they are CEOs of other companies and are loath to bridle the pay of the CEO that they are overseeing. The auditors are not truly independent because they are not only paid by the company, but they often have side gigs with the company. And they certainly don't want it. It's bad public relations that they would be voting, or they would be finding out serious problems. And then, as we know, the largest shareholders of any company are institutional shareholders: BlackRock, Vanguard, State Street. And while, for example, Vanguard bills itself as the steward of the little guy with its massive index funds, the little guy doesn't buy Vanguard based on how they then in turn vote on CEO pay. Meanwhile, Vanguard has another type of client, and that is the corporate pension fund, the 401k plan. And again, it's bad public relations if they are voting against CEO pay. So CEO pay has been escalating. Usually in any given year, the average CEO pay goes up. Again, it went up to $18.5 million last year. But there's some guy that's an outlier that makes $100 or $200 million. Michael Eisner had an eye-popping $80 million in the late 1980s. Michael Milken, who was not a named CEO, so it only came out in litigation, was being paid something like $150 million in 1 year when he was at Drexel Burnham. But $1 trillion is what as you had just mentioned, is what the Tesla shareholders approved for Elon Musk. And that is an unfathomable number. I've been trying to fathom it. So as I mentioned, the Fortune 500 make an average of 18.5. So if you add them all up, that's $9 billion for the entire Fortune 500. Now that 1 trillion, by the way, is over 10 years. So arguably it's only 100 billion a year. That's still 10 times more than all of the Fortune 500 company CEOs. Or another way to think of it, it's still unfathomable, 10 times more than all of those 500. So let's say you paid him in cash in $100 notes. So how much would that be in his parking lot? Well, I looked it up. So a note is 0.0043 inches. So if you stack the $100 notes one on top of another and got to 1 trillion, that'd be 678-mile-high mountain of $100 notes. And even that is unfathomable. So let's pack them in a 20-foot container. Those are the things you see on the highway. How many of those containers do we have to load up in his backyard to get to a trillion? And now it's down to a number that you can think about. Packed with $100 bills, 20-foot container, there's be about 200 of those.
200 of those.
Still wouldn't quite fit. And they're $100 notes. We're not talking about dollar bills, $100 notes.
Okay, but Kathy Woods is going out there. She went out and defended him and said, "Go! I'm voting for it." She put it in and said, "Yeah, I'll vote for this too as well." And he won pretty big the number of the vote too as well.
Well, insiders have a huge amount of control in this company. The so-called independent vote, I don't think was supportive. There are two major proxy advisors, Glass Lewis and ISS, and they recommended against. So I think sober people who are not under the thumb of Elon Musk voted the right way.
Love it. And you are the Communist Republic citizen. You wear a pretty big hat there. I want to pull it up right now for those of you who don't know Public Citizen. I got the website ready to go here. And tell us a little bit about Public Citizen and what you're doing there, and how can people get involved in Public Citizen?
Yeah, we're a 50-year-old group founded by Ralph Nader. I like to describe ourselves as sort of an impossibilist group. We only want the best, 50 years of not taking yes for an answer. My portfolio is Wall Street generally, and I was hired shortly after the financial crash of 2008 to help deal with the legislative response to that, which was the 2010 Dodd-Frank Wall Street Reform and Consumer Protection Act. That had in it, sadly, in retrospect, rather than prescribe rules, safety rules for banks, it described some principles and told the bank regulatory agencies to write 400 separate rules. So that's what I spent the first bunch of years doing, trying to cause the agencies to write the best rules they could. And this has to do with solvency standards. So the average American has 40% more assets than he or she does in liabilities. JP Morgan, America's largest bank, has only 7.9% more value in assets than liabilities. So in other words, if some of those assets, and for a bank, an asset is a loan. If only a small amount of those go bad, mighty JP Morgan is insolvent. So we're trying to increase that number from 7% to a bigger number. Has been a major effort. The banks hate that solvency level. They would like to argue, they would like to operate with as little solvency margin as possible. By the way, they've already won the lexicon battle because they call solvents capital, and they describe it as holding capital, as if the money is somehow in a cookie jar. So much of my effort has been to try to just win the language battle and explain, no, this is not about holding money back from the economy. This is about a ratio. This is about solvency. We certainly don't want another bank bailout. But I would say in the last 5 or more years, the cryptocurrency craze has dominated a lot of attention. We thought it would dissipate with the bankruptcy of FTX and the incarceration of Sam Bankman-Fried, but the crypto guys realized that they could spend a small amount of their profits on Congress, and did. The Supreme Court empowered corporations to spend an unlimited amount of money in a decision known as Citizens United. And since then, corporations have increased spending, but crypto went crazy. And Public Citizen documented that in the 2024 election, they spent more money than any other industry had ever spent in the 10 years since the Supreme Court, or more than 10 years since Supreme Court made that decision. More than $120 million. And it scared the bejesus out of members of Congress. But I mean, not so much Republicans, but the Democrats. They took out Katie Porter in California during her bid for the Senate seat. And they took out Congress's biggest crypto critic, namely Sherrod Brown, who was at the time chair of the Senate Banking Committee. They spent $40 million on his opponent, Bernie Moreno. And the calculus, the unfortunate calculus for a Democratic senator is saying, listen, do I really want to be anti-crypto and get all this money spent against me and lose my seat, when really crypto is not that important to my constituents? Only something like 6% of Americans own or have anything to do with crypto. A Pew poll shows that Americans don't have a very positive view, but they don't have a very intense view. I mean, I'm sure Americans are concerned about the war in the Middle East and Ukraine and reproductive rights, and they're going to decide who they vote for the Senate or the House based on that. They're not going to really, they may not say, well, my guy is pro-crypto or my guy's anti-crypto. So it's sort of a free pass. And they say, well, as long as my constituents aren't going to kick me out because I'm anti-crypto or pro-crypto, then I'm going to take a vote that's politically more expedient, because I do not want $40 million spent against me the next time I try to run for re-election.
Yeah, so when you talk about it from the political side of it, I mean, you got to talk about the Fed too, right? And Bart, I want your opinion on this Fed as well, because that is banking 101, right? Powell's going to speak next week and talk about possibly a Fed rate cut. What are your thoughts about this Fed? Is it very political as compared to the past? Are they on the right path? I'll leave it to you on this one.
Well, our Roomba president is making it highly political with the appointment of Mirren, who keeps his day job as being a counselor to the president and part-time, and with his threatened firing of Lisa Cook, the Fed governor, that will be adjudicated by the Supreme Court, I believe, in January. So it's as political as it's ever been. I personally bet that the Supreme Court will allow almost all the other agencies to be under the thumb of the president. That is to say, he can fire any commissioner, SEC commissioner, board directors, but they will draw a line around the Fed and forbid him from firing Lisa Cook or anybody else for that matter. That said, there are so many board seats opening up that he will have effective control within a half a year. And so no president wants interest rates to be increased, but it's kind of an interesting challenge for a president who defeated Joe Biden in part because of inflation, because lower interest rates are going to be an invitation for higher inflation.
And when you talk about it from the banking side of it, I mean, we've over the last 200 years of banking, and I'm reading Andrew Sorkin's book, 1929. I asked this of J.P. Morgan's former head of their Forex desk for 42 years, Steve Flanagan, the same question. This administration, how would you rank them compared to other administrations in regards to good, bad, the ugly? You're not as scared of telling us what you think about any administration. So, Bart, talk to us a little bit about this administration in the future.
Well, Public Citizen is possibly Trump's biggest critic. We have 22 lawsuits against this administration. On banking policy, it's the exact opposite of Biden, where Biden was pushing for tougher, safer regulation. Trump's appointees are dismantling all of that. I guess the single worst is Paul Atkins at the Securities and Exchange Commission. I mean, Trump doesn't have full control over the Fed quite yet. But the damage is already taking place. They reduced the ESLR, what's E stand for? The SLR is supplementary leverage ratio, and I think E is extraordinary. But that's back to that solvency level that kicked in about 2 weeks ago. But I think this is by far the worst administration for sound banking policy in my lifetime.
Mm-hmm. And when you look at the bank regulations, they haven't really changed yet. But do you see the Senate and the House coming together for some kind of regulation law?
The next move will be on what the Republicans primly call capital formation, and this has to do with companies raising money on the stock market. And from our perspective, what they want to do is to be able to sell dogs to the unsophisticated, untested companies, and they do that by claiming that the little guy has been shut out from great deals for too long. And as you know, there's a SEC has a definition of an accredited investor. Right. It's something was said in 1990 and really needs to be inflation adjusted. But it means that if you make more than $250,000 a year and you have assets worth $1 million or more, not including your house, then people can sell you high risk stuff. They can offer it to you. If you're not accredited, they can't offer it to you. Now, some of these people are in fact sophisticated, and they realize when a deal is a bad deal. And so what these Wall Street guys want to do is to be able to sell it to the unaccredited investor, a guy that has $5,000 or $10,000, and they want to sell in this deal that says, hey, this could be the next Apple computer.
But what do you say to people that say, hey, you know what, a couple like Quasar Markets that maybe want to go to those smaller investors and give them access to the ability to be able to invest? You have companies like, Dealmaker that brings those Reg CFs and Reg A's, and Start Engine with Mr. Wonderful. What do you say to those companies?
Well, I say that the pressure to change that rubric that I've been talking about is not coming from investors. Investors who, if they've got $10,000 and they walk into their Wells Fargo brokerage guy, there's 5,000 public company stocks that they could choose from. There's bonds that they could choose from. And none of them are saying, I really want to get a deal where there's no public disclosure, there's no quarterly or annual report, but it could be that 1 in 100 chance. That's not where the pressure is coming from. It's coming from the sell side. Those guys say, look, I've run out of rich guys who are no longer accepting my deals. Let me at those poor retail investors and try to sell them at their churches, sell them, wherever they show up. And that's what these bills have to do with. And again, they have misleading names for them, and they call them capital formation and angel investing. But again, it's increasing the number of marks for the vultures.
And Bart, you've been in this for a long time, and you've kept the good fight up for a lot of people. Let me ask a question. If there was one thing you could change, you had a magic wand and you could change that one thing, whether it's the banking, a politician, or whatever, what would that magic wand be for Bart Naylor?
Money in politics. That we would have essentially public funding, that it would not be a race to see who can raise the most money from those that have the money, who are the rich and the corporations. There would basically just be, the guy that is the most articulate and well thought out on the campaign trail. Say it again.
How do we fund that?
Taxpayer dollars. And it would be a minimum amount. I swear, if you watch television a week before an election, you've seen that ad before. You don't have to see it 7 more times. And you just have a couple of ads saying, here's where I am on the issues. And then, go on my website. We just wouldn't have a House seat costs $2 million. A Senate seat costs $7 million. That's misspent money. Just let's give the guy 50 grand and he can throw up a website and stick up a billboard and tell you how he or she thinks on these issues. And then you make the decision, not swamped with misleading ads.
And we've talked about the bad side of money. Let's talk about the good side. Are there any good people out there you like? People that you support and is fighting the good fight in Congress or the Senate somewhere?
Yeah, I guess my favorite senators are Elizabeth Warren, Chris Van Hollen, Sheldon Whitehouse, Smith from Minnesota. Yeah, there are a lot of people fighting the good fight. In the House, we work a lot with Maxine Waters, Stephen Lynch from Massachusetts, Brad Sherman from California, Sean Casten from Illinois is great. Yeah, there's quite a few. And it's tough because they're not making any, they're on this committee that their constituents don't really care about, and they're not making that much money because, they're not shilling for Wall Street.
But then again, you've got people saying, you talk politics and money. We have a website now devoted to those members of Congress that are buying stocks and selling stocks that have that insider information. Would you stop that too?
Yeah, we would. My colleague Craig Holman is behind the Stock Act, and yes, we would. In all candor, I don't know how much truly inside information a junior member of Congress really has. Other than maybe the private hearing with Mitch Bradley, the guy that ordered the Venezuelan boats to be bombed, but it's not like these hearings are you're learning something that the next day the pharmaceutical stock is going to go out the wazoo. That said, it is true that some of these congressmen are mighty successful at picking stocks.
I mean, the Nancy Pelosi tracker, the AOC thing, it's like, some of them are on the chairman, the boards, the committees are like, all of a sudden they make millions of dollars and we know what their salary is during the year, right? I'll leave you one other question before I let you go, and this is exciting because I'm hoping to have you on back more often, Bart, because I think a lot of times those of us on the finance side really want to hear the other side thoughts too. Excuse me. NASDAQ and ICE, New York Stock Exchange, and a lot of these big brokerages are moving to the state of Texas, creating exchanges down there. Thought process on more exchanges? Do we need more exchanges? Do we need less exchanges? What are we at right now with that thought process?
I can't help you. I worry about moving to Texas, a state that's racing to the bottom and trying to attract a lot of corporations there, not by approving sound investor or consumer protection laws, but corporate friendly laws. I don't really have a sense of how expensive it is to trade stock right now. I'm sure it's cheaper than it used to be. I'm sure it's not as cheap as it really could be. People get involved in the stock market not out of philanthropic reasons, but because they're trying to make money. Thanks to competition, we do have better prices generally. Again, not particularly my issue, but thanks for asking.
Yeah, Bart Naylor, my friend for many years and my former boss. Dude, thanks for being on the show, man. This is really good fun.
Thank you very much.
Thanks, Bart. See you next time.
Okay, cheers.